we have a new monthly close all-time high in Bitcoin. It's $102,000. Not only is it a new monthly close, it's also the first monthly close above 100K. So I know it feels a bit disappointing, and that we should be higher with Trump and the ETF inflow, MicroStrategy, and all that. It feels a bit delayed, but I guess we need a little bit of patience.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In this video, PlanB will talk about his Bitcoin prediction for February 2025. Will BTC skyrocket or crash? Let's catch him up to know more about his insights and what could be coming next.
In fact, to be specific, I expect at least 3, possibly 4 or 5 months of red dots, which means an RSI of 80 and higher. Now, it's very interesting if we look historically at those points where the RSI was 80 or higher, then we'll see that the average return in those periods, that red dot areas, was 40% plus. So that means a 1 month of 40% plus would be from today's 100K, 140 in February. And, well, since I expect multiple months of red dots, at least 3 times 40% would bring us from 100K to 270K, which is about here somewhere. This is the 300K line. So that's the absolute minimum Bitcoin price that I expect in 2025, 270,000. Now, if we look at 4 months of 40%, that would bring the current 100K to $380,000. And 5 months would even bring it to $530,000. So that's above this dotted line. So we'll see what happens. These numbers, the 270, 380, and $530,000 Bitcoin, are much higher than what most people expect. In fact, today's poll on Twitter, on X, shows that 3 out of 4 people can't even imagine one single plus 40% monthly move, because they haven't been in those periods. They don't know what it is. They think that's a thing of the past and it can't happen in the future. What I think, it will most certainly happen again. Very interesting to see. 200-week moving average, the black line, it's at 44 right now. Up 1,000K from last month, from December. And in my opinion, that slow increase will go faster.
Bitcoin's bull market is approaching a critical juncture, with renewed activity in long-dormant wallets sparking fresh speculation. Historically, the reawakening of these wallets has signaled major price movements, often occurring in the final phases of a bullish cycle. As Bitcoin inches closer to uncharted territory, investors are keeping a close watch on key levels, particularly the crucial support at $97,190. The sudden movement of previously lost Bitcoin, coins that have been untouched for years, suggests that early holders in whales might be positioning for the next phase of the market. Whether they are taking profits or redistributing their assets, this shift often coincides with Bitcoin's strongest price rallies. As history has shown, such reactivations have been followed by increased market volatility, making this moment pivotal for BTC's trajectory. At the time of writing, Bitcoin is trading around $100,733, facing resistance in the $104,000, $108,000 range. If buyers manage to push past this zone, Bitcoin could enter a new price discovery phase, potentially soaring to $120,000 and beyond. However, failure to sustain upward momentum may lead to a short-term correction, with $97,190 emerging as a make-or-break level for the ongoing rally. This particular price point holds weight due to the sheer volume of Bitcoin acquired between $95,772 and $98,719, approximately 138,000 BTC distributed among 1.45 million addresses. If Bitcoin remains above this level, it reinforces market confidence and limits sell-offs. But a break below could trigger a cascade of selling pressure, potentially dragging the price down toward lower support zones at $92,000 or even $88,000. As Bitcoin's price action unfolds, all eyes are on whether it will sustain its bullish momentum or face a temporary setback. With dormant wallets awakening and historical patterns playing out once again, the market is bracing for what could be the most explosive phase of this bull run.
Next couple of months. So I think the black line, the moving average, will curve upwards like it did in 2020, 21, 2017, and here in 2013. So I think this black line will curve upwards. Then realized price, the gray line, it's the cost price of the buyers of the last 2 years, right? It's a 2 years realized price. Cost price of the on-chain buyers last 2 years. It is $74,000, up from 71 in December. And by the way, the total realized price of all the on-chain buyers ever is 43,000. So that's the same level, comparable level to the 200-week moving average. But what we see is that the realized prices are increasing about 5% each month. That's good. That's a bull market thing, but it's less than I expected. I expect 10% or 20% increases in realized prices this year. So that means that prices have to go up considerably to make that happen. Now, for the stock to flow, it predicts this average price of about $500,000 for the halving period 2024 to 2028. With a standard deviation, of course, it will not be exactly 500,000. So the standard deviation is 2 times that, 1 million, or divided by 250K. And mind you, most other models, for example, the Power Law model, expect much lower prices. They expect something like we go from the current 100,000 to a 200,000 top this year, and then we crash back to below 100K. So that's much lower than even the lower band of the stock to flow model of 250K, and also lower than the 270,000 that we talked about based on 40% increases this year. 3 red dots, 3 RSI months of 80 plus. So very interesting to see what happens next. And as always, all models are wrong. Some are useful. Models are simplifications of reality.
A recent statement from European Central Bank, ECB, President Christine Lagarde has reignited the debate around Bitcoin and XRP, fueling discussions on the future of digital assets in institutional finance. Crypto influencer Amélie highlighted Lagarde's evolving stance, pointing out the contrast between her 2019 remarks on distributed ledger technology, DLT, and her recent dismissal of Bitcoin as a potential reserve asset in the EU. Back in 2019, Lagarde acknowledged that DLT was clearly shaking the system, recognizing the disruptive power of blockchain-based innovations. She noted how financial disruptors, alongside traditional banks, were transforming the industry, referencing the ECB's own efforts with instant payment systems. This statement suggested that the real financial revolution lay beyond Bitcoin, in assets that leverage DLT for efficiency and scalability. Now, her firm stance against Bitcoin's inclusion in EU reserves has been interpreted as an indirect endorsement of XRP and similar assets. XRP supporters argue that its fast, low-cost transaction capabilities align more closely with the ECB's vision for financial evolution. With institutions increasingly exploring blockchain-based solutions, Lagarde's words reinforce the idea that while Bitcoin may not be the future of finance, DLT-powered assets like XRP could be. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.